Hey traders, Jeff coming back to you here on March 6, 2025. Today I want to break down what's happening in this market. Why is it so crazy, it seems? Well, it's not as bad as you may think, but we've been going up for quite some time now. So when you're seeing this correction happen, it's due to a number of things. There's some sector rotation going on. I'm going to review that here with you momentarily. But also just that we went up for so long here, the pullbacks have been so minimal that once they mention tariffs and the new administration and things like that, market is beginning to extend itself a little bit here. So people think the sky is falling. Well, it's not falling. It's definitely lower, but it's not falling. Stay with me. Let me work this out for you, and we'll get started. All right, back at you. So market turmoil, or is it? Well, as I mentioned before, this is just a combination of things that are going on in the market all at once. It seems like when it's happening to you or to me or to someone specific or maybe a particular stock or index that you're supporting, it seems to be picking on you. It seems to be coming after you. Well, there are some reasons why it's happening here. Again, we come out with tariffs in Mexico and Canada. I think there's been some reprieve on that, but nonetheless, tariffs and regarding that. And when you think about tariffs, people say, well, why is a tariff so dramatic in the market? Well, you got to think about it. If you put a tariff on Mexico for 25%, they're going to cover that tariff by basically increasing food prices. So food prices are inflationary. So the market reacts that. It kind of builds that in. So it's not just inflation number off CPI, or the PCE number, it's also related to how the food is coming in on the import side coming in and how that relates to, at least the way the market is concerned, the inflation side. So anyway, that's one of the big reasons. Let me show you some other reasons why. This is clearly a sector rotation going on here from tech. Tech has been way ahead of itself for, I'm going to say months. I would probably be short in saying months. It's probably been for a couple of years now. And you're starting to see the unwinding of some of the tech stocks happen. Let's take a look here on the next slide. So sector rotation, you can see down in here, notably, this is just for this 1 week performance, 3.25% in technology. We haven't seen this type of sell-off in technology in quite some time. So it's certainly welcomed by some, but not in others. So what do they do with that? The goal of sector rotation is to be able to rotate out of some stocks and put that stock, that money, or those resources to work in better places or more efficient places, at least for their member base, so they can continue to outperform and meet their goals that they do each and every year. So you can see up in here, healthcare has been on a little rebound here in the last few weeks here, but I want to focus on financial down here, which is around 2.86% a week. Actually, last week, just last week was 2.33. And this week was 2.86 in a full 7-day or 5-day performance. And also last week in technology was 4.35, and we're at another 3.25. So it's definitely extending itself out in here. And what do we do about it? Well, we have to realize that this is the type of market that you have to be extremely careful in. The way that you trade is going to be a little bit kind of stymied. For example, I'll show you our performance chart in a little bit here. Our trading is way down in our members room here. We're basically being a lot more selective. We're waiting through that doldrum period, trying to find the better approach in our stocks that we trade. We typically trade anywhere between 3 to 5 to 7 different new entries a day, not counting the exits for profit taking or some losses and stops and things like that. And so we're down here on March 6th, so most of this week being March, just a handful. So we're probably have cut our trading by about 65% just in the front part of March as a result of the things that we're sharing with you in here. So be mindful that this rotation is not bad. It's just different. And if you happen to hold some technology stocks, you're going to see that a little more than maybe someone that's not holding those technology stocks. More specifically, you're seeing stocks like NVIDIA, Supermicrochip, SMCI, which actually bolted higher in the last few weeks because they had that February 25th hearing that they got their the requirement from the NASDAQ in order on that date. And so the stock flurried from around $25 to about $67 and now pulling in because it did get ahead of itself. So in a few minutes, we'll take a look at those two tech stocks and determine and show you the difference. Even when the market bounced a $5 bounce day, which was pretty crazy in the fact that the market bounced $5, moved down $5, back up 4, back down 4, back up 3, back down 3, and back up 4. It was just pretty amazing, all the sloshing going around in trading. I mean, you're right, you're wrong, you're right, you're wrong. So it's definitely, when you see that type of influence in the market, it's better to sit back. Don't think that you're going to be part of that next move, because a lot of times it may keep going and you're in there without a plan, trading just off the intraday side, and the market's going to get the better half of you. So again, last thing I want to show you here before I get into the markets is actually the performance review, just to show you how, what I talked about earlier in March, how we're way down in our trading area. This is March here, so you can see our first trade at Dash here. This was some vertical spreads, and here we did some weekly spreads, except should have been a weekly spread in there. And you can see some of them here. We had some losses, we had some wins, we had some minor losses, some minor wins, some minor losses. But at the end of the day, we're up 36 bucks. Now, are we happy about 36 bucks, at least from a room perspective? No, but the reality is, how many people do you know, which maybe it could be yourself, that's actually down, not having a good month because they're getting caught up in the slop? It's very unpredictable right now. The market closes on a high after being extended, and what happens? It gaps down $7, bounces around there, keeps breaking new lows, new lows, new lows. We were closing in on 3 standard deviations today before we bounce off the bottom in there. So what we made up yesterday, we certainly gave back today. You can see just kind of some of the stuff here. Just a snapshot of how we've really backed off from our trading in here in this environment, because we just don't feel comfortable in that environment. Yes, some would have worked, some would have not, but it's better not to get ran over by a freight train when you know one's coming. So let's just stay out of the way. Now, let's take a few minutes and go over the charts. As always, I'll start with the SPY here. You can see this has just been an onslaught in here. Now, I'll put some extra lines in here this time. I want to kind of show you pivot points, and also want to see support number 2. This would be actual pivot point. This would be support number 1, which is the red line, the pivot point being the yellow line, and also the second support level and the third support level. I don't keep them on all the time because I don't really want to, I look at them and see where that they might draw a line there, I might reference that, but it gets your chart pretty well crowded in here. Well, let's take a look. First off, we actually made this high. We took out the high here, we double timed, we triple timed it, right? We came back, and then right in here, it took a few extra days, and we finally got through. People were thought, maybe this is the end, maybe this, or the beginning of that little breakout forward. But you got to keep in mind, we came from 348 in the SPY a few years back, and this kind of topped out around 613 or so. And it wasn't too much longer before we had this red bar. Now, at the time I did a video, I took the trend line off here, but we broke that trend line pretty significantly, right? And if you notice, remember the conversation, we broke the 8-period moving average with the 20, the 21. We came down, and here's the important thing. We didn't bounce. We sat down here. I look at these all the time because a lot of times you get these reactionary big moves. Sometimes they'll just come back in. People scalp in the bottom, right? Short covering. They did neither. They sat down here like a slug right at this level 3 on the resistance level. It ended up being level 3 later. You can see that support line right in there. We did gap up as a result, continued down, but I want you to keep an eye on where the dotted line is here. We've crossed everything. And anytime that the 8-period EMA crosses moving averages, specifically the 20 or the 21 EMA, you can see that things begin to change for a couple of reasons. Number one, not just because we see it and it changes, because these are algorithmic. A lot of traders use these, and also they're tied into the markets to where they cross over, but it creates automation in selling or buying if that's the case. It doesn't guarantee it's going to go down, but it does create a more algorithmic buying and selling. That's why when you talk about moving average, why they can have a lot of meaning is because they can begin the cycle and the momentum cycle of going down. So it's not just that it crosses, that the computers kicked in gear. They weren't willing to receive that, and the market kept going down. Look at the time it went back up. Came right back up to the 8-period moving average, right back down. Right, where did it go? Closed at the low. When I see bars that actually don't have much of a top and very little of a bottom in terms of a wick, I see that as very confluent selling. They're not in a hurry to buy this market back. Then we thought the reprieve happened here. This is going back on Friday the 28th. A move back higher, gapped At this point, about 30% in. It sat down here for until about 3:30 last Friday. In the last 30 minutes, we had a bull run on the intraday side like you've never seen before. The thing ran just a country mile from 584 back up around 594, $10. It wasn't that $10 is so huge, and it really is. It's that it happened in 30 minutes. So anything on the short side was just infected. And so the short covering just began to catch its fire momentum coming up. So people thought they're good and clear, gapped up on Monday, all things were good, but notice where we are in the moving average. We're still below support lines, back into resistance areas. We're at the 50-period moving. We're below every single major moving average, except the 200 that you would look at, and that a lot of the trading in the street looks at as well. And then we gapped up, went slightly higher for just the early session, came right back down hard, and then we did have a little bounce off here at this pivot line right in here, right? And then same thing on Tuesday, we came back more of a long-legged doji. This thing was sitting right here at the top towards the end of the day. The last few minutes pulled all the way back into here, about 70% of the channel, and then back and forth. What a whiplash this has been. And then today, thinking that, okay, maybe we're going to gap down, and then it bounces back again. Look what happened. It did bounce back up early in the morning, or I'm sorry, it actually bounced down and stayed down, bounced up middle of the day right to here. That's what that was, right to the pivot line, right to 580.34. And then basically had another sort of long-legged doji kind of represented here. Another thing I want to point out here, the 200-period moving average. Now, this is a SPY. You can see the 200-period moving average is right here between number 2 and number 1 on the support lines in here, right? Came down, we bounced off of it. I would say we bounced off it to 571, probably a couple, $3 lower, a couple bucks lower before it began to kind of remiss and get back up in here. Look at the volume today. It's 84 million still post markets going. Really big volume day on this particular day on Tuesday, but volume has been increasing dramatically. Now, if you remember my comments before, why didn't Whippy create what? Stage 3 environments. Does that always happen that way? No, but you could blame this on tariffs. You could blame this on administration. You could blame this on a number of things. But in reality, stage 3, it's wide and whippy. When the market starts doing these ebb and flows at this level in here, you have to take notice. You could be into the edge of a stage 3 coming your way. Now, the difference of a stage 3, we're going into a stage 4. A stage 4 always comes after a stage 3, but sometimes a stage 4 is minimal, right? It comes back down a little, it settles in here. It doesn't have to come back down to where it was. Otherwise, the market would never gain any traction in there, right? So we never know. These are all speculative formats. So let's take a look at the Qs real quick in relation to what the SPY's doing here. Very similar. We have the lines in here, through the pivot lines here, very much the same. It's going to, reminisce the SPY a lot. You can see 1, 2 levels. We went a little bit further down to the 2. Why did we go below the 200 a little more? Well, we're in the NASDAQ now. So the NASDAQ is sold off, 4.35% last week, 3.35% this week. So it stands to reason why we would have a lot bigger sell on this here, down to this level in here. Again, the low on this third support level is 481.93, and that's a pretty good amount down, but it's possible we go there. Now, the thing I want to point out both in the SPY and the Qs is that we have got extended down here at the close. Now, it's gapping up a little bit in pre-market, post-market, but remember, when you're extended from the 20, the 21, and here, you will most likely get a snap back. It doesn't fix the problem. It doesn't mean we're going higher. It just means that, okay, it's correcting itself in the short term. It got a little ahead of itself. And so you're seeing this, and so sometimes this happens because the buying pressure lightens up and the more selling, the buying comes on. But you can see, I'm expecting a little bit of a snap back in the market in here, maybe back to the pivot line, catch the 8, and then we'll reassess this in the next week and see where it's going to go. But that's kind of where my bias is, and a little bit of a bounce here coming back into the pivot line around the 8 EMA, and then we'll go from there. Finally, we'll take a look at the IWM, and then we'll look here at NVIDIA. You can see this is obviously been a lot weaker stock in general. You can see down to the pivot lines, not so much. It took a lot heavier dip earlier, but it doesn't have that same top level, where these were at the top, they came from the top. This came from like a mid stage in here, and then started off pretty good in the year as it tracked up and higher, but came down right back down where it was and worse. So you can see it's just kind of gaffling around these bottom and tops in here. It's still got about a $6 range, $5 range from day in and day out. Let's take a look at the NVIDIA, as I mentioned before, because in relation to the tech. Selling off, you can see NVIDIA down here. I don't even need to really draw this, but I'm going to leave it on there. Actually, let me take these off just so I can clean the chart up a little bit. And this will make it a little, I'll leave the pivot on there. So you can see we came down with NVIDIA pretty darn hard here, right? This thing was getting back up into here, went down to this 115, back up in the 140s, right back down here, nice little bounce. Once again, to get extended from here. The 8-period movement broke through the pivot lines here that was established here at 116.69. And then look what happened to the market. Market at least had a nice high rise. NVIDIA would not get off the bottom. Now, we happened a little bit post-market here. NVIDIA just was hell-bent to leather today. Just sustainable, would not bounce, would not get this thing over 112.20 or so, stay right down below these even 5 and 15-minute EMAs. And if you take a look at one more, and this is one, like I said, that's been all over the place in the daily charts because of the February 25th right here when they kind of got their, well, actually it's right in here. Where was it? Right. It was right in here, I think. February 25th was the deadline, then it gapped up on the deadline right here. But prior to that, went from $25 up to around $67, $66 on a hard run. So this pullback is a little more just because it got ahead of itself. So I would say this would be normal. It's sloshy, it's back and forth. It's got a high beta to the stock, which means it runs a lot more. It runs like a $100 stock, not a $36 stock based on the beta. We're sitting right here on top of the 50-period moving average. We'll see what tomorrow brings in here. So a lot of shifting around on technology. Some of that money coming out of the financials as well. If you look at Bank of America, as of today, you can see this thing was down pretty good amount. Wells Fargo, some, and then you're also seeing some of the casinos in Caesar. You're also seeing MGM Studios. So there's been some rotation out of these gambler stocks as well. Not so much in Wynn and not so much in Las Vegas Sands, but in the two majors in there, in Caesars Entertainment and also MGM, which tie a lot of their stuff into the services as well, regarding gambling services and whatnot. Those have been definitely on the downstroke. So anyway, I hope this was helpful. I would say my bias going forward is we're going to probably hit a little bounce here. I don't know how much life it's going to have in it, but it will probably move back up. My best guess is, and picture back up to the trend line. I think we're looking at the 580 area, maybe the 590 and 85 area. We'll see what happens from there. If it settles around here, if it gets back and forth, it could regroup and then make a new move higher. But right now, we can only look at this day in and day out. I think we're heading towards a little bit of bounce back to the 580, maybe 585 area at the 90, at the 8 EMA. Then we'll come back and reassess and see where we think it goes from there. Till next time, Jeff Yates, Full Throttle Traders. By the way, click in the description if you like. You can actually have access to a free training that I did here called the Adaptive Bull Spread. So look for that. That's actually come in the next week or two. So look for that. Take care, guys. See you next time. Take care.